All right, what's up, traders? Trader family. What I'm going to do, I'm going to kind of show you some charts and stuff like that. Kind of go over some things over what. Oh, this camera is reversed. So anyway, I'm gonna go over today's actions. What happened today? We had two. Well, actually, it just depends on what trade you took. But we was a 3-and-1. Well, it just depends because we're not out of gold yet. We 3 for 3, but if you took the USD CAD, which was a fourth one, because I said it was optional, but you could have took it. If you did take it, then we lost one particular trade. If not, we're still 3 for 3 for today because gold is not out. I'm going to show you why I insist on staying in that one, which is why I'm going to do this video. Also, I'm going to go over a number of different things. We're going to cover 6 things. I didn't do a live video because I'm going to do this one kind of quickly so I can get back out there and hang out with my wife before we go to bed. But I wanted to give you guys a bit of education so that you can kind of understand how to read these markets. Today was a big one. It was a very unique day. Just like last week, we had a very, very unique day in the markets when 4 o'clock hit. Apple News came out and the market just completely spiked in, and that's extremely rare. That's not an everyday occurrence. So the same thing today. Today was an extremely rare occurrence. Doesn't happen very often, but the Feds came out talking about interest rates, which has a lot of businesses across the board very, very nervous because what they're saying is that, hey, the economy is heating up so well, let's kind of pump the brakes, let's slow it down by hiking the interest rates, which to me never made sense. You know, if your business is booming, why would you find a way to slow it down? Hey, let the thing keep going. But anyway, that's been teeter-tottering for a very long time. There's debates between your president and him even saying, hey, that's not a smart business move. But either way it goes. Bottom line is housing market is being affected. There's a lot being affected by the Fed announcements, which is why there was a big situation going on. Let me give you guys an early warning tip. Some of you traders, especially if you're brand new, you come into a group, you say, man, I'm ready to get started. Let's go ahead and start trading. Let's start making some trades. And then you see that there's nothing happening. Well, let me tell you what happens. There's typically a calm before the storm in the trading markets, okay? In other words, when there's a huge announcement about to come out in the markets, you will know at least a day or two in advance because for some reason the market just goes sideways. That's when they talk about consolidation. The market just tend to go sideways. It doesn't really go anywhere. It's just stagnant. It's only going up and down a few pips. Now, if you're a scalper, you'll love it all day long because all you want is about 10 or 20 pips anyway. And those are the ones who's going in with the big 5 and 10 standard lots. And yeah, they make a bundle on small moves. That's fine. But for the average person who just want to trade and kind of build your account, you're getting frustrated because it's like, man, I can't do anything with this market because it's moving slow. Well, that's because right before big announcements, the markets are holding off themselves. They call it having cash on the sidelines. In other words, they're not ready to just quickly jump in because they're feeling some kind of way. They're calculating their risk to kind of see, okay, what's the potential outcome, and if they don't know, they'll just stay on the sidelines, and only the retail traders or the newbies will be the ones jumping in big money, thinking that the market is going to move because they don't know how to sit still and wait. So anyway, which is another reason why even on the trades we took this morning, I was very specific. I said, hey, FOMC news. I gave you that 2 days in advance, a day before in advance, and even this morning. I warned you guys, FOMC, we don't know what the Feds are going to say, and therefore don't go in too heavy, even on perfect setups. Sometimes some of you guys, the reason why you're bouncing from group to group, from indicator to indicator, from system to system, you're doing that for a long time, and you think it has something to do with the systems. You have to understand that certain things will never have anything to do with any trading system. You could be the best trader in the world, which I'm connected, and I know several professional traders, and even they have losses sometimes due to they have the perfect setup, they do their normal routine, we don't break routine, everything else, it is what it is, what we see is what we see. But when news comes out, news can swing them charts in whatever direction the market is going to do. Never forget, while you're looking at patterns and colors and charts, you cannot forget that you're trading an entire country's economy versus another country's economy, the entire country. So when you're just looking at these little chart patterns, looking for rhythms in the market, that's fine. And it works on a normal basis. But don't forget that if that country makes an announcement, anything can happen. This is why you cannot over leverage on a position. You got to be careful because it has nothing to do with you. You may be a professional trader in your mind. In my opinion, some of you guys in the group, you're very good. You may be, in my opinion, in certain aspects of trading, some of you guys in my group, you're better than me. And I admit that. I have no problem with it. But having been what got you better is because you learned, don't over assess your abilities, because you cannot forget an entire country is what you're trading. And if they come out with an announcement, one tweet from your president, anything can happen, then that strategy is out the door. And it's nothing personal. It's just you're tampering into an entire country's economy. So that's what happened today. Perfect setups. Everything was pristine on certain pairs. Certain pairs worked out. Others didn't. That was another thing I'm going to show you guys on the charts. I'm going to show you how news tend to correlate with the daily trend, which is why, for the most part, I'm always telling you guys, if you want my perfect idea of a perfect trade, it will be the ones that, I don't care what time frame you trade with, whether it's the 15, 30, 1 hour, or 4 hour, for the most part. Now, there are setups, and I'm going to show you something that we took today. As a matter of fact, I have one behind the screen. Once I get off of here and get my big head out the way, I'm going to show you one that it went against its anti-trend, but we have a trailing stop on it, which we'll cover that as well, so that if it goes back in the wrong direction, guess what? We get tapped out and we're still in profit. No worries, no babysitting the trade, but I'm not expecting a huge move, though it can. But for the most part, I don't expect it to, because when I look at the daily, if big news announcements come out on these pairs, then I know typically, for the most part, news tend to flow in the same exact direction and push that currency pair in the same exact direction as the daily setup. That's the reason why when I'm looking at the 1 hour setups, I tend to look at the 1 hour and the 4 hour and the daily. Where if I'm trading on the 30, I look at the 30, 1 hour, 4 hour, and daily. I want everything to sing the same song, because if a big news announcement comes out, and I'm going to show you this on the EU, on Euro USD, it actually happened. And I happened to miss the entry the other day, but news came out against the US dollar. And when you see this, you will see it right on the chart yourself that the Euro USD play right in accordance with the direction of the trend on the 4 hour. The USD CAD, it was a perfect setup. Very tight stop loss, which is why I didn't care about whether I won that one or lost it, because it was so clustered, so tight, until my stop loss was so tight, it didn't really matter. But you'll see on the daily, the news came out, it played right in line with the news. On the gold trade, same exact thing. It played right in line because gold was already heading up. News came out, it shot up a little bit more. However, I'm going to show you why I'm not in a rush to get out of it. So we do have a lot to cover in a very short amount of time. This is going to be educational. If you don't understand everything that I'm saying, don't worry about it. That's why I record this stuff, so that you guys can play it over and over and over again. Go to your own charts and learn how to read these charts. You have to learn. Don't be dependent on somebody else all the time. You have to have mentors and all that stuff, just like I do. I still keep mentors, right? I still sign up for mentorship programs with people who I know are professionals. I keep myself surrounded with people who are much better than me, because this thing, hey, it's a lot of learning. It's a lot of learning. I try to simplify by putting it in charts where you just match colors, but there's a lot of thought process that goes on behind it, okay? So let's hit to the charts, all right? Let me get my big head out the way and we'll go ahead and get started. All right, here we go. So let's take a look at this one first. This is one I sent a signal out this morning on. This is on the Aussie New Zealand. As you can see, I'm still in the trade. As you can see, here's my entry right here on the green line. When I entered, as you can see, triple arrows right there. Boom, candle closed below. I got in right about here and sent you guys out the signal. As you can see, I'm up currently 33, 34 pips on this thing. Now, because I entered, this is the first thing that I want you guys to understand, okay? And I'm going to show a little demonstration. What you could do is, once you enter into the trade, remember, you can double click on it. All right. And then what you can do, oh, I'm sorry, not double click. You can right click on it and click trailing stop. Okay. Trailing stop. And right here is where you can instantly put in a trailing stop. But before you put in the trailing stop, the first thing you have to do is slide your stop loss in place wherever you want it to be. So in other words, enter your position, put your stop loss in place, and then immediately click on your entry again, click trailing stop, go to custom, Okay. And what you're doing is you're converting points to pips. So let me do that again and show you what that means. Okay. Right click, trailing stop. And as you can see, it's going to give you some numbers. It's going to say 15, 20, 25, 30, 35, 40, 45, 50. I thought when I first started, and nobody taught me this, I thought that means, oh, it's going to have a trailing stop of 15 pips, a trailing stop of 20 pips, and so forth and so forth. Or no, 50 pips. Yeah, that should be more than enough room. So I was under the assumption that that's what this means, 50 pips. I did not understand, but this is counting points. So therefore, you go to custom, and you have to convert points to pips, because at 50, it's not 50, it's 50 points, but it's only 5 pips. It's only 5 pips. Okay, you have to drop a 0 or add a 0. So that's why we go to custom. We're going to, like right here, as you can see, I got a 30 pip trailing stop. So as soon as I entered the trade, I immediately knew I was going to leave. I don't like watching my computer all day. So therefore, what I did was, I went and put myself in a 30 pip trailing stop on this particular one. As you can see, my stop loss originally was up here, but then the trailing stop, as the price was moving down, as you can see, here is now my new stop loss. Here's my entry. I don't care what's going on with this pair anymore. I've been gone all day. I'm just getting home. So guess what? I don't care. The whole thing was running on its own. So as the price is moving in my favor, it's trailing. The stop loss will automatically move in the direction that you set it. It'll follow the price action. So if the price gets down to here, then my trailing stop following by 30 pips will be right here. It'll automatically move itself. So I don't have to sit here babysitting my trades. Okay? So that's an option. You can put on the hard, like if it was on a 4-hour time frame, I probably put a 50 pip stop, trailing stop. If I wanted to just, really just walk away and be done for quite some time. And as long as price is moving in that direction, the stop loss will follow it by 50 pips. Now, how do you do that? One last time, what you're going to do, right click, go to custom, and whatever number you want, you have to add a 0. So if I wanted a 30 pip stop loss like I want right here, I have 30 with a 0, 300. You add a 0. If you want a 40 pip, you put 40 plus a 0. If you want a 20 pip, you put 20 plus a 0, which would be 200, and you click OK. And walk away from your computer. Everything's said and done. So again, take your trade, put your stop loss in place, right click on the price where you entered, and go ahead and set your trailing stop. Okay? All right, that's one thing off the book. And you can do that on the opening of a trade. Immediately when you open a brand new trade, you can do that. Okay? You don't have to wait. And because I know we talk about trimming profits, let the rest roll, which is another option where you can just leave wherever your settings are. Your stop loss was originally where it was, and you take profit, or if you don't have one, that's fine. But the bottom line is, then later on, once it moves into profit, what you could do is, take some off, which is reducing your lot size to lock in gains. And then after that, and as you can see, I'm only using just a little small demo account. So what if this was to be so, what I would have did, this is only 3 cents. Let's say I use 3 standards. I could take off 2 standards and only leave 1 running, and then have a trailing stop on that. Well, guess what? You can have a trailing stop at the very beginning, the moment you enter the trade, and you can still walk away. Okay? By the way, side note, somebody had asked, what are these AA lines? As you can see, the AA lines, the channels that you got are channels that you can add to your charts, and they just read a little differently, and I want to kind of cover that real quick because somebody had asked about that. Since we're here, let me do this. See, as you can see, the green channels read a little tighter because what they're for is for the shorter time frames, and the AA lines is bigger channels, and they read better on the longer time frame. So if I was to let me remove the channel lines. Let's take those off. Okay, and there we go. So where do you think I think price is going to go? I think price may end up here. Okay, right around in this area and tap this line. Okay, so if I think it was going to tap this line, I could put my take profit right there, and voila. That's why. Why? Because look at how it respected this boundary. Touched, triple arrows, red, and it came on down. And of course, we had our assessment right here. Everything was perfect. So if it backs up on me, I ain't tripping because I got a trailing stop and it's already did its job. It's locked me in profit, and then we go. Okay? So that's that. Now, this is important. This is critically important because when I get to talking about gold, you will see why I'm not in any rush to get out of gold. Okay, so hang on in there. I'm going through my little checklist. So we covered two things already. Next is, let's see, there's an app I told you guys to put on your phone, which is called My FX Book. Okay, My FX Book, what it does, it has red envelopes and it shows you what announcements are coming out on which currency pairs on a daily basis. There are two currency pairs I don't really trade a whole lot. Well, that's a lot. It depends on afterwards. Like for an example, typically you guys will see, and this is actually on the checklist, so I'll cover this now. There's typically a reason why I never send out signals before the London market. In other words, London opens, I'm in Central Time, London opens around 1 o'clock or 1 o'clock in the morning. Frankfurt, which is the Frankfurt market, it opens up at 12. Both of those are part of the European Union currency. I typically never send out signals. Here's the reason why. When the London market and the Frankfurt market opens, it tends to go anti-trend. So if you ever traded in a pair during this time and it was working perfect, then all of a sudden you wake up sometimes and it's not. That's because that's the way the London markets sometimes tend to work. It goes anti-trend, it spike up against you, and then it goes in play. However, right before and during the U.S. session, it tends to go in the direction it's supposed to go. That's why I stopped doing the London session. Okay, they call it the London breakout, but sometimes the breakouts break out against you if you're holding a trade and you just entered it right before you went to bed. Okay, so I wait until after the opening of the London session, wait a couple hours, and like last night, I woke up at 3, I couldn't sleep, woke up at 3 o'clock, it was 3 o'clock. Okay, the London session was over, and I was dialoguing with some of you guys in the group, and hey, I just found these setups, and we talked about it, and we hopped in, right? Because I wasn't worried no more, because the manipulation opening of the London session and the Frankfurt was over. Okay, so that's that. But anyway, point is, as far as the euro and the USD, those are inlaid daily with a lot of news. So you got to watch on the app to see which news are important and which ones are not. Some of them are not important, but the FOMC, anytime the feds are talking, if it's called NFP, which is non-farm payroll, that's one of the biggest ones. It can spike if the feds are coming out and they're talking about FOMC is the ones the feds coming out talking about interest rates. That will definitely move the market, as you've seen it do today. Okay, so anyway, that's that. All right, next, I want to show you this. Let me show you another trade, and then we're going to get into the gold one, and we'll call it a day. All right, so now let me show you something else. Here it goes. So if you took this trade, congrats, one win for today. And let's show you the other one, NZD CAD. As you can see, triple arrows pointed right here. Blue, 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 triple arrows, and we were good to go in that trade for a nice little short run, okay? And as you can see, for the AA lines, it bounced right off here. Then you had the support, and it took off for a couple of pips. I had a trailing stop on this one. This is why you don't see me in this position. Oh, I got to go back and show you that too. Why did I put a trailing stop? Now, normally I don't. But here's the reason why I did on these two. Let's go to the 4 hour. Now, let me show you this. Let me move it up. Click on the 4 hour. 4 hour was looking good. It's bouncing off the channels as well. But here's where the problem came in. What did it say? See that? The daily is heading down. So since I'm trading anti-trend, I'm not expecting this to go up too high. It could, but this is why I entered this position with the perfect setup, but I still entered it with a instant trailing stop because I don't anticipate this to be a big move. Same thing with this AA, this one right here. Okay, watch this. 4 hour, not bad. Respected these AA lines, came on down. However, when you go to the daily, what do you see? The daily is saying, hey, this thing is going to go up. So this could possibly only be a pullback. When I say pullback, that means it goes up, hit this resistance, pull back some, and then fires away. So I don't expect this to be a long-term play, which is why I entered instantly into the position with a trailing stop. Why? Because I don't want to sit here babysitting this trade all day. Let the trailing stop do what it do. Worst case scenario, it starts moving in my favor, like this one here. I'm hoping that it'll come all the way down here on this little demo account, but if it doesn't, who cares? Why? Because the trailing stop has already moved me into profit by trailing the price action by 30 pips. Okay? Now, let's get into the gold one, and that'll be that. Okay? I think we covered that. Big news. Okay, two things we're going to cover on this last part. We're going to cover the gold play, but we're also going to cover the news event for today. Okay? Let's go to USD CAD first. Let's do an assessment. So as you can see on this 1 hour, it was looking good on this 30. Look at that. That was pretty, but that was when it was up here. Then it dropped and reset. Okay, let me show you what happened. Okay, so what happened was it was looking real pretty. See, it was, woo, that was really nice at first. But here's the reason why. When news came out, what did it respect for the USD? It respected the daily. Bow, and went back down, and there was a little small loss. However, as you can see, like right here, if I was to get into this trade, because this was the same setup before it reset, okay, how many pips was it? Right here, if you took that one, I set mine's right here, that was what? A little 40 pips, something like that. Now, I actually put mine's right here underneath the line because I sure wasn't sure because I knew US news was coming out. And so it was like 30 pips, something like that, 30 pip stop. It was really, really small stop loss for such a larger time frame. So I wasn't tripping, no big deal, okay? No biggie. Biggie small. Okay, so anyway, that's that. But when news came out, notice what it respected. It respected the daily. Let's go to another pair. Here goes something else. Remember I told you I was going to show the Euro USD. All right, here's the Euro USD. Okay, right here. Let me show you. Euro USD, if you were trading that, when news came out, it respected the direction of the daily. Okay, and here's gold, our final one. As you can see, gold has been on a huge uptrend. Here's where the education comes in on gold. I promise you guys I want to teach you a little bit about gold. Gold is not your normal currency pair, which, you know, it just normally trades one way or the other with currency versus currency. No, it's its own standalone. It reacts to U.S. news. It reacts to the fear in the market. Okay, I'm teaching you guys stuff that you may not have ever heard. But what happens is that gold tends to respect the U.S. news. Okay, that's what it does. Here's oil prices, and I'll talk about that maybe another time. But anyway, the point is, you remember I taught you guys in one of the videos that what controls the market. So those who have been paying attention, and by the way, for those who want to look at the AA lines, look at how it respected. Bounced off this line, then came up. Boom, where is it sitting at? Right here. That's why I'm not in a rush to get out of this trade yet. It has not broken through my trend lines here. It's respecting them. That's why I'm not in a rush to get out on my other account. I'm waiting to see if it hits my stop loss, cool. If it doesn't, then guess what? I'm expecting it to respect the trend line and go down. That's why I wasn't in a rush to get out of it. And if you are out, that's fine. Some of you guys said, oh, I'm in loss. Well, I'm asking, where did you put your stop loss? Okay. Because you should have had it at least somewhere up here on the entry. And I told you, yes, this is a 4 hour. So if that's the case, you're going to have to use a smaller position to respect. And this is a demo account, so don't worry about that. I just got a little penny one up here just to show you all a little something. But the point is that I wanted you guys to respect showing a smaller position to respect the stop loss. So I could move it above the big arrow. But what I did was I moved it above, right above this support. Why? Because it came down, hit this support, and what happened? It respected it and went back down again. It came back up again, and look what happened. Is it above this one? No. This is what they call a triple top. 1, 2, 3. And on triple tops, usually there's a drop. You don't believe me? Let me show you. Some of you guys have doubted me on this particular trade before. Okay, on last week. Okay, and right here, it did the same thing. Let me shrink that. See if I can show it better. Right here. Okay, you can see it. Right here, it came in. I gave you the signal right here on entry. And then it came up. Boom. Came back down. Came back up. Boom. Came back down. Went sideways. Came back up. Boom. Triple top. 1, 2, 3, and actually if you count this one 4 times, it tried to break up 4 times. 1, 2, 3, and 4. How do you know? That's what these dotted lines are for, you guys. That's what they're for. 1, 2, 3, and 4. And it could never break above it, and then it went on this massive sell-off, and boom, there you had it. It went all the way down for 420 pips. And why is that? Because even on the daily, it was setting up at the top of the channel, and because it couldn't break, and you can see that right there. How many times? 1, 2, 3, for one last time, and then it dropped. But you see, it never went past the channel. See what I'm saying? So now when I'm looking at gold, what do you see here? Boom, 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 and it's constantly trying to hit the top, but it ain't breaking through. That's why I'm not in a rush to get out of it, because if it's respecting this channel and it's not breaking above, then chances are, what will it do? And if it does drop on this beast, look at this drop. From here to here, that's about 482 pips if it plays within the channels like it should. 482 pip drop. But this is why I'm respecting it. I'm putting it at the highest resistance, which was that dotted line right here. Boom, right at the top of the channel. As you can see, it stopped dead cold on it. Boom, dotted lines come in. You have your triples, okay? And boom, it tried to come back up, but it didn't even go here. And that's what they call, when you hear higher highs and lower highs, look, high came down. Lower high, because it didn't get higher than this one, but it still went high, came back down. And then here's this one. It's a lower high than this one. So as you can see, it's starting to already make a progressive step downward. So that's why I'm not in a rush to get out of my position. I'm willing to wait a little bit and see how it plays out. This is what it looks shrunk down. Triple arrows, very clear. You can see that, okay? As you can see, it multiple times respected this channel. Bounced off, climbed the ladder, shot all the way up. Boom, now it's trying to break above. Did it get it? Nope. Nope, nope. Get that out of here. That's what it's like. Get that foolishness. Get that Makimbe Mutombo. Get that out of here. Yeah. Okay? But here's the point. When news came out, though, what direction did it respect? Did it respect the downtrend or the uptrend? It respected the uptrend. So this is a lesson that I'm trying to tell you guys, that when it comes to trading and using this system, if you're going to ask me what is my favorite position where I don't have a problem, I'm not a fan of over leveraging your account, but if I ever am going to over leverage my account, listen, the Euro USD, which I missed that entry and I'm mad I did, but if this was on the 15, right, and it was this trade right here, and then I go here, okay, it's somewhere up in here, but the point is, let me go here, 15-minute, and then click on the daily. What did the daily say? The daily say this thing is supposed to go with the direction up. So I'm matching with the daily. So if you're asking me, we trade other positions? Yeah, absolutely we do. That's the reason why I say if you're going to go counter trend, and this is really for scalpers, truth be told. If you want to be a good scalper and you want to go against the trend, look for the trade setups on the, the 15 or the 30. I prefer the 30 or the 1 hour because it's still the same thing, just like we're winning in this one. Okay, if you say, hey, look, I done scalped me about 24 good pips out of this, okay? With the trailing stop, I'm good. No problem, okay? The point is you can scalp on the higher time frames, and because it's a lot more solid and they absorb the spikes in the market versus the smaller time frames, they spike too hard and get you tapped out. Okay, so but the point is I can go ahead and enter this trade, put instantly my stop loss in and put a trailing stop. And if I was to have, say 5 standard lots on this one, guess what? That's hundreds of dollars already. And I can close this trade out and I'm still scalping. But if it keeps moving, cool. But I don't expect this to be a long-term move. Why? Because of this. Daily is saying something. But if you're asking me what would be the best trades, man, all day long, if I can find a trade on the shorter time frames that match up with the 4 hour and daily, and the 4 hour and daily is in the same direction, just like on gold and silver too. See, same thing with silver. Look at how it's respecting that. It broke, boom, tapped it, can't break up. Boom, boom, boom. It's still trying right here. Boom, boom. It tried, but it ain't going nowhere. See, boom, boom, boom. Look at that. If you draw right here, look at this line right here. You can clearly see that right there. See how it went up, came back down, lower, and then lower again. And there's the trend line across the top. So what do you think I'm thinking it's going to do? I think it's going to drop. That's what I think. I could be wrong, but that's what I'm thinking. I'm looking at this one, same exact thing. Lower highs. Oh, snap, didn't mean to do that. Let me put this trend line and we'll be done. Okay, right there. Lower highs. See that? Boom, came down. Boom, came down. Boom, came down. So as you can see, it's not breaking higher than this. So if it's not able to do that and it's hitting major resistance to the upside, then it only has one other direction to go over time. It's losing its power. It's losing its power, which is why these indicators down here are matching up. It's saying, hey, there's weakness, 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 sell off, sell off, sell off. It's going to fall. It's going to fall. Okay. But if it does go up here, okay, then we're just out of it. But I'm patient and I'm willing to wait. Okay. So hopefully this video was helpful. Now you guys see why I'm not in any rush to jump out of the gold trade, but you also see exactly why how news, just to recap, we covered 6 things. Number 1, we covered about how the AA lines, which is these blue lines, why I use those more since I trade longer time frames than I use the other channels. You can use them in conjunction or you can use one or the other, doesn't matter to me. But the AA lines spread it out longer and they work better on the higher time frames, okay? And then next we talked about how news affects is played out on the daily stage, on the daily time frame. Typically that's why I like jumping into trades that are in the same direction as the daily. So if a big news event jumps off, guess what? It's going to pop in our favor because guess what? We're trading in the direction of the daily trend. Next, and also that's the reason why you see some of these major moves like this one here, okay? And I'll show you that real quick and we'll be wrapping up. Let me do an insert right here and let's see if that holds true, okay? So I'm going to put right here and let me pull the screen up some over here. Okay, you can see that little green box. I'll stop it. Let's make that rectangle white. Okay, let me show you that. Rectangle is white. All right, there we go. So now we'll move this up. Go to the daily time frame, see if we can find it. Yep, boom. See, it was in an uptrend. It caught it on the lower, boom, and came up. That's why it worked out well and went for a long run because guess what direction it was in? In the same direction as the daily. Okay, so that's why I said that even the shorter time frames, if you hop in the ones that's matching the daily, you have a better chance of a long trade, a long run on that position because it's in the same flow as the river. So consider the short trends as the lake running into the river, which runs into the sea. Okay, so that's the reason why you want to jump into those because it'll flow in the same exact direction and you're not paddling against the wave. Okay, and then we talk about my FX book. If you want to know about which news events may come out, then you want to add that to your phone and you'll be able to see it on a daily basis. We talked about trend of profits and re-entering. That was the other thing that I wanted to show you real quick, when to re-enter the trade. Okay, so what I did was because remember, I was up 100 and some pips already, almost 200 pips. Then it comes back, tap me out, and get a little something. Okay, now when it hits this bouncing line right here, when it bounced, boom, you wait. And once it settles, then you jump back in. Or here's a better way of knowing when to jump in. Let me remove this trend line and you will see this for yourself. See that? As soon as it came up, boom. Okay, if you had a trailing stop, it got you out, right? Dang. Did I miss the big move? No, don't worry about it. If it retraces back up and you get this resistance line, notice it respected that. It respected that here. So that's why I'm back in on this one with this on this demo account and on my other account. I'm back in because why? It hit this resistance right here. It hit it right here and it respected that, and it's going to, as you can see, it looked like steps. If you're walking down the steps, walking down the stairs. So therefore, this would be a great place to re-enter on a position, and you can still put your stop loss to the higher step just to be on the safe side. But basically, as you can see, it never went higher than the next step, So if this is the next step down, what do you think the next step would be? You get what I'm saying? Okay. So that's where you can re-enter on a trade right there after it's made a push. Okay. We talked about entering a brand new trade with a trailing stop. And then we talked about I don't trade before the London session. Okay, so that's more than enough for you guys to study on. Have a good night, and I'm going to hang out with Nancy. Bye.